Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's July 11th. This will be our chart lesson for the day. And while most of the day really was in a trading range, it was a slight uphill, so it had a slight upward bias to it. But when you're swinging back and forth above and below the EMA like that, you generally can trade it both ways. So you see a few shorts in here, although most of your trades will be long. Um, there were about three that I liked to the short side when it two of them were early on when it was looked more like a trading range than really an upward channel. Um, but we started working back down off the upper side here, and you can see we got back below the EMA. And I like that one short, and we'll discuss that when we get to it. So a little quieter today, not as much volume and volatility, not as many trades. But let's back out and talk about them. You can see we were mostly working sideways here. We did have an upward bias at this point. Um, it may have been, you may have even been able to find something off this low, but I like this right here. Work it up. You can see it was holding prices later. And so we had our first break right here. But when I came in, we really were going sideways. There was some strong resistance across here. But notice how we're making higher lows all the way up until right here, and we get the break and a little double bottom, and then it goes higher. Um, this one was a little iffy. It's not a very good setup. Notice that you got a new low, first entry pullback. There's a second entry short right there. It fails. It really doesn't fail, but you could really treat it like one. It's not a very good signal bar, but when you get a trap, it doesn't really matter. But there's not a lot of room before that high. And so if you did take this one, the reason it's green is you have to let it break higher and drop you a limit order in here and try to get a little better entry. You just want to have enough room to scalp out before you get to those highs right there. As long as you do that, I'm okay with that one because it is a trap. It would have worked regardless, even if you entered here on a stop, but you would have had to ride all these pullbacks back. Um, It's tempting to enter in these as well, but notice how you've got all that resistance, so you're better off to wait and see if it pulls back. And notice how it pulls back. We do get a close outside what looks like the trend line here. It's a fairly bullish bar, but it bounces right off these lows, so I like it regardless. And just again, make sure you got enough room to get out before you get to here. And you can see it really took on off and broke right through. You get a little breakout pullback long here, but not a very good setup. Um, I don't think it was worth risking until you had this double test here. There's a failed second entry short right here. This is a double bottom, so first, you move up one leg up, first entry, second leg up, second entry. So really, you could have entered here. It's a very ugly signal bar. I'll mark it green because you could have taken it and it would have worked. You would have probably gotten spooked really bad here when it pulled back, but you've already had your break. You're not quite to the overnight high. You did get to the closing, so that makes this a little more suspect of entering without having enough room. But when it gives you that double test and a nice, fairly bullish bar there, I like it. So another nice, quick, easy move up. All you get out of it is a scalp. You might have got a runner out of this one, but you wouldn't have got anything but a scalp out of most of these trades today. We did make a high here, and we kind of double tested it, but I don't like that signal bar. That one looks pretty good, but it couldn't break below it. Again, you could probably argue for a green one here if you want to be really aggressive, but um, I don't think I would take it. I think I would wait. We'll mark it green for those that really want to be aggressive because it is a fairly bearish bar, but it couldn't break below that one. So uh, what I would do is let it break below that one and drop a limit order back here where your original entry would have been on that bullish signal bar and see if you couldn't get out, and you could have. You get a little, it does push on through. This is kind of a reversal pattern. It pushes on through, pulls back, but notice how it makes all those bottoms, those matching lows, 1, 2, 3, and then it breaks below and then turns down. I'd just wait. I don't see anything that I really like there. Um, until it gives the double test. You make this high here, and then you test it once, twice. And so I liked it then. Um, Going short here. Again, I would probably let it break lower and try to get a limit order and see if I could get something a little better. But it wouldn't have mattered. It would have worked either way. But notice that's your first break too, so you're looking for a new low. You just want to get it in with enough room to get out there. You really didn't have to have it here because it's you can treat this really like a failed second entry long. It's a double test rule. And then of course you come down, you got your break and you move to a new low and you're moving across, you get that one little tick lower. That's a nice bullish reversal bar. I like that one. You're probably, you're only looking for a scalp, but you might catch a low and you might get a measured move like this right here starting from here. It doesn't happen, but you still get your scalp. And somebody sent me their chart today and they were asking about entering here. It looked like they only sent me like the little square box about like that. And without being able to see all the price action, sometimes it's hard to just answer, should you enter right here if all you can see is, just picture all you can see is from there to here, and you can't really see what's been, the big picture. It's hard to tell sometimes. So make sure you send me a bigger picture where I can see the, what's going on with the price action, because this whole thing tells the story, not just this few bars in here. And that's where some people get tripped up, is they're just looking at right here and they're not taking into account what's happening. We were moving up. We got one leg, a correction, a second leg. I don't know how close to those are being measured, but there's leg one and then leg two. So you see we didn't quite get it. We got a fairly nice correction before we headed up again. It turns out there's a two-tiered channel here. We just didn't know that. It looks like a trading range at this point. So, but anyway, I like going long there. Just if nothing else to catch a pullback to test those highs again, which is what happens. And then it kind of sets a trend line up right there. But I don't think you can afford to go short right there. You could because you could consider it a failed break higher. But I'm looking at that trend line and there's no break of it yet. And you see we did try to make a new high, but this trend line ends up holding it. You can see that one. It's kind of working up there. You get a little close outside and move to a new high. But again, you get the double test rule of you test it once, twice, and then really there's your double test. But that's a fairly bearish bar. Confirms that trend line. That's the main reason I like that one. It's a lower high than here as well. And you got to figure we're probably coming back down to test the midline and maybe all the way back down here, because this is looking more like a trading range at this point than a two-tiered channel working up. You really didn't get your channel confirmed. You actually could confirm it here, but it's a little iffy. But when it bounces here again, then it's pretty obvious this is holding up through here. But these could have just been horizontal lows, and it was hard to tell until you got your next bounce here. But anyway, I like that one for a short. Just looking for it to make a new low here, or to retest these lows. And it could go all the way down and go the midline and maybe all the way down to here. So that turns out to be a fairly nice trade. And you can tell they trapped some longs there, because look how it rockets down right there. And that's usually a sure sign that they trapped a lot of people. That's the whole idea, is to fool you into entering the wrong way to actually move the market in the opposite direction. And it really, the bottom dropped. And of course it bounces. Look how far away from the EMA we are. It's right off that possible trend line. It's a nice bullish bar. This is your signal bar, not your red one, the green one. It's a fairly big bar, so you may let it break higher and then come back and put a limit order in here. But a lot of times you'll miss the best trades. And you can see how this took off. And so you got to be careful with those. But anyway, it's working up. It pulls back, you get a first entry there. It shoots right on through the EMA, pulls back and tests it. That's a failed second entry short. I like going long. You really go long above that bar. It's right into the highs there, but that's a reversal pattern, and I figure that's going to take us to at least here. And it does. It takes a little work to get up there, and it actually pushes through. But notice how it makes that low there, and it holds on the previous resistance. And then we test it once, twice. There's your double test rule. Tested it 2 more times, it holds. You got a fairly bullish bar. Go long there. Actually, when it turns back and goes out the other side, it's tempting to enter there. The reason I didn't like that one though is because it's so close to those highs, and this could turn into a failed breakout. Even though you got enough reason to go long there, you got a lot of resistance right there and not a lot of room. It pulls back again and makes a double bottom, and that's a failed second entry short. So I like that one, but again, you don't have a lot of room there, and that's strong resistance across there. I don't have a line on there, but it's there. You can draw that line. So that one's a little aggressive, but notice how it breaks out this time, pulls back, and bounces right off there again. So now you got that low, you got your double test rule right there. I like going long there, figuring that it's a breakout pullback long, and it takes on off. And of course, you should have drawn this line and drug it around up here just to see where it turns down. And really, you can see the midline fitting through there really well. And so if you just got a measured move and moved it up equal distance between these two and moved it up, you can see it bounce directly off of it. I don't like going short there yet though. There's a trend line working up. You can see that trend line. We do get a close outside and a push up all the same, but you might get another push up. There's a failed second entry long right there. Actually, it's not right there, it's right here. So, but it's right at the lows there. And there's a lot of support right there again. So I wouldn't take that one. But when it pulls back and turns down right off where your suspected trend line is there, I like going short there. Look how bearish that bar is. Go short right there, hoping you catch the very top and it moves on down, but it doesn't. It bounces around. You don't really want to enter here. There's a little trading range. I'll explain this all the same just in case somebody did. You can see the little trading range right across there. There's your highs and there's your lows. And this is a failed break higher. And this is a double bottom, so this can still be considered a second entry short, but it's not a very good signal bar. It is right off that trend line. So close to the 2 o'clock hour, I don't think it's worth taking. But you know, if you want to be super aggressive and take a chance that late in the day, you could probably take that trade. So we'll give it a green all the same. But I'm telling you, I wouldn't take that trade. And that was it for the day. That got you in the 2 o'clock hour. This was really the last one I would take right here. And that's because it's a trout and a fairly bearish bar right off a trend line. So. But yeah, you can see, you really, like I said, you really wouldn't, I didn't really trust this and didn't even put it on here until it bounced right there. And then you drag it up and you don't know where it's going to be up here, but if you think you can find the midpoint, which you see it, we're swinging and testing it on both sides right here, then I find a measured point, and that's exactly where it went to. So most of the day was within a range, and you still didn't know if you weren't in a range and weren't going to fail here until you got the double test right there. Of course, so once it starts going higher, then you got to think, hey, maybe this is a two-tier channel, and try to figure out where it takes a skill. It's a skill. It takes a while to be able to learn to do this, to find these lines without a lot of, for sure price action. And I get a lot of emails about trend lines, and they're way off, and how do you know if it's this trend line or that trend line? But there's trends within trends. Like right here, this is a short-term trend. That's a valid trend, but this one's valid too. It's a little larger, and it's just a correction within the bigger two-tiered channel there. But that's why price action works on every level. But you got to understand, there's trends within trends. There's short-term ranges within trends. I mean, it's not as cut and dry as it, hey, we're in this is an uptrend. Or it's not as cut and dry as this is a downtrend, because within this little downtrend, which is within a bigger uptrend, there's a shorter downtrend, there's a range, and there's a shorter uptrend. So, and notice we didn't get a break and retest of this bigger channel working down here, but we overshot it, and then it reversed, and that will happen more times than it'll happen rather often. An overshoots is a big overshoot. It doesn't mean that you won't get a, if it's a really long term tough trend, you may still get a break and a retest of the low. But on a little shorter term trend within a bigger trend, it can't get below. This is a key entry point, so it can't get below that. So it reverses. It overshoots and reverses, and that's relatively common. So make sure you understand that. But I hope this was helpful today. Just a so-so trading day, more of an average kind of trading day. Still lots of trades in here. But the thing you got to understand is when you're in these transition points going from uptrend to downtrend, and then from downtrend to uptrend, sometimes the best trade is no trade. If you're not sure what's going on, like right in here, just don't take a trade. Wait till it's very clear again. And I tell people that, but we get new people that come in and they probably haven't heard that yet. But the hardest part to trade is the transition point between where the trends are switching, because it takes you got to have a lot of practice and a lot of skill reading this chart. And then sometimes you'll still get it wrong. So nothing's 100%. But once you see this enough and you've been doing it for a while, and when I say a while, I'm not talking about a few weeks or even a few months. I'm generally talking in years. And if you don't understand that, you're not going to come in here and learn. You're not going to learn this skill. It's a very difficult skill. So you're not going to learn it in a short period of time. Most people aren't. I'm not saying, and I don't care how bright you are, I don't care how high your IQ is, that most people are not going to learn this in a short period of time. It's not to say that there's not people that can't come in here in 6 months, but I don't care how smart you are, you probably won't. Generally, the smarter you are, the harder it is, because you got to unlearn so many dumb rules that you read that are considered gospel. It's just amazing how much stuff that you read over and over in every trading book that's considered gospel in the trading world, and it's total hogwash. Those people have never been profitable trading, and they write these books, and it's all great in theory. It's all great on paper, but it doesn't work in real trading. You have to be able to read this chart, and trust me, this is all this is predictable once you learn how to read the chart. You'll still make mistakes, because even in an uptrend, there were a couple of pretty strong pullbacks. And really, this market closed. It closed up a little bit. We closed Friday around 21.21. We closed today 21.30. So we closed up, although we gave a lot of it back before the day was over. And you'll see that a lot. You'll have a huge trend up, but by the end of the day, it pulls back and it takes back and closes almost unchanged. Or it might go way up and way down and way up and way down and still close unchanged. So that's just the way the market works. So, but anyway, I'm going to wrap it up for today. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.